Hi, this is Adam Levine with Levine Capital. We're here today at TCS Annika Homes office in Philadelphia, and today we are speaking with one of the managing partners, Daniel Edrei.
Thanks for coming, Adam.
Thank you. Start off with your background and talk a little bit about your transition as a lender with B Corp Capital Markets and how you transitioned into a equity investor as a limited partner equity investor, and now your new venture being a co-GP.
Absolutely. So, as stated, I was a commercial lender for over 20 years with Me Corp Capital Markets. We were primarily a bridge and mezzanine lender, and we were, to some degree, on our bridge platform, a lender of last resort. It was expensive money, and as a result, we didn't get the best of sponsors or the best of real estate in the best of locations. And what happened with the downturn of the economy in 2008, 2009, a lot of our loans went into default. Interestingly enough, though, the loans where we were conservative as far as LTV, the bridge loans where we were below 50%, had the most defaults, whereas the mezzanine debt, where we were as high as 80% or even higher in some instances, we didn't have any problems with. And the reason why we didn't have any problems is with the higher leverage loans, we were focusing on the best sponsors in the best locations with the best quality real estate. And when the world went upside down, these quality sponsors and quality real estate didn't have so many problems. The bridge loans, there were defaults, there were foreclosures, there were workouts that took many years to get our skin back. But the mezzanine did quite a bit better. So what I did shortly after that is I changed the model for the company. I wanted to go after yield, but I wanted to do so in a safe way. So I created what some people called dequity, because it was a combination of debt and equity, whereas we would invest in a quality sponsor. We would do so, though, in a priority position in the waterfall. We would get a little less of the upside than we would have had we been a pari passu investor. But we were very successful in that product, and thus began my investment as an LP investor. Now, shortly afterwards, I started Annika Equities. And the reason why I did that, it was with the same staple of investors as Me Corp. But my father, and entering his 70s, was looking at winding down. And I was, at the time in my early 40s and winding up. So I started Annika Equities, doing the same thing that I did in Me Corp, LP equity investing.